Welcome back, traders. Thank you guys so much for joining us here on another episode of Tradewinds. We are super excited to bring to you a new member of the team, a gentleman that has been around the world and back several times, starting off as a researcher and a worker at the Bloomberg terminal. Some of you guys might know that that's the biggest and most important terminal of data that professional traders use across the globe. From there, he bounced around as an investment manager and researcher, analyst, and he now operates primarily as a trader over at CoinW, a crypto specialist, a trilingual human being, a master of words, a master of the charts. It is my honor to present to some and introduce to others the absolutely incredible Boris Friedman. How you doing, brother?
I'm good. Thank you for the very amazing intro, Aaron. I'm doing well. And how are you?
I'm good, man. I'm good. Thank you. So, brother, I obviously you've done so much in your career, but you've really gone in a really interesting track. So you started off in very traditional assets. Most of us at Trade Delicious are really traditional. I trade futures and equities. Jordan trades forex, and that's pretty much all everyone does. I was the oddball out for forever for trading futures, but you're a crypto guy, and you have such a way of breaking it down. You really offer a lot of legitimacy to a space that a lot of people don't really consider to be a real asset yet. A lot of people still treat Bitcoin as if it could go away. How in the world did you gravitate from the traditional assets to now being such a big voice in the crypto space?
Yeah, for sure. So I really made my first investment in crypto back in 2013. It's when I bought my first small portion of a Bitcoin, but I really didn't do anything with it. Just kind of let it sit there. And I didn't really get into crypto trading or crypto investing until late 2017, when for those who aren't familiar, that's when the big epic bull run happened in crypto. So during that year, Bitcoin, I believe it started at around $3,000, maybe even less. And by the end of that year, in December of 2017, it was went up to a high of $20,000. So that was a pretty incredible run. And I just remember, especially during Q4 of 2017, while I was working at Preqin, there was a lot of hype and euphoria, just not only in the media, but also in the office. Like, people were like talking about Bitcoin, they were talking about Ethereum, they're talking about Litecoin and XRP and all these different cryptocurrencies that some of them like don't even like exist anymore, I don't think, or at least aren't tradable, because some of them turn out to be, I guess, not real projects, or maybe even in some cases Ponzi schemes. But in any case, yeah, there's so much hype and euphoria, and people were like making money left and right. And I was kind of like sitting there, just doing my job. And I was like, well, I want a piece of this as well. So yeah, during that like initial, I guess, or not the initial, it was more like towards the late stages of the bull run. That's where I started really getting active in quote unquote trading. Like at that point in time, what I was doing in retrospect wasn't really trading, it was just gambling. But in any case, I started purchasing a lot of Bitcoin and other cryptos as well. And it's pretty funny because at that time, even on exchanges like Coinbase, you could actually buy crypto using a credit card. So I was not only buying Bitcoin and Litecoin and Ethereum with just my own money, but I thought, oh, let me just use my Visa or my Discover card to make some purchases, because I want more. I don't have enough cash. So anyway, now this is a tangent, but you can't buy crypto with a credit card anymore, not in the United States at least.
Talk about leverage, man.
Yeah, for sure. So yeah, people were way over leveraged, including me. And yeah, so essentially I kind of made some money initially during that period. Ultimately, the market came crashing way down. Bitcoin ended up going back to 3,000. I lost a lot of money, obviously. Also piled on some credit card debt, unfortunately. And then that's what really forced me to really get into trading and real, I guess, investment management, and learn how to properly manage my risk when it comes to trading this market. So really throughout 2018, 2019, and into the early part of 2020, I just spent my entire free time really diving headfirst into trading and especially the cryptocurrency scene. So I was reading books like, I mean, it's kind of like hard to get your trading education from books, but I started with some educational content from books, but I was mainly through like online media and online courses where I really had to like filter through a lot of different material. And yeah, ultimately throughout those, I guess, 3 years where I was still working at Prequin, like I was saying in my free time, I would just spend every extra moment just learning about risk management, learning about different trading techniques, and then ultimately, especially in the early part of 2019 into 2020, I slowly started to become profitable again for my trading that I would do outside of work, and then ultimately by early early 2020 or even late 2019, I was looking at my equity curve on one of my trading accounts, and I kind of realized, hey, you know what? I could probably consider doing this full time. I'm like still young. I don't have any kids. I'm not married, so this is probably the most optimal time to pursue this journey. So ultimately, I left my job at Prequin as a hedge fund research analyst, and I yeah, basically became a self-funded trader. And the timing of it was a bit strange because I left right at the end of February 2020, and then obviously 2 weeks later we had the COVID lockdowns, and we had
Wow.
all those crazy things happen in the markets. Like I was actually listening to your podcast with Jordan last night,
Mm,
and you were talking
yeah.
about how the futures would go limit down on Sunday night. So I was around. I
Yeah.
mean, that's when I first really started trading full time. So that was a really crazy time to actually not just be a trader, but to become a full time trader. So that was definitely a very scary time, and luckily I survived that, and I'm still here trading full time. So that's kind of like a brief, I guess, a brief overview of how I got into this space and how I got into trading.
It's wild, man. What a time to go off on your own. It's like talk about getting involved in the apocalypse. So walk me through it, man. I know I've seen a lot in terms of your how you post all of your trades, and you're so public about everything that you do. When did you start feeling comfortable to do that? Are you comfortable with it now, or is it just something that you do? Like, that's amazing, man.
Yeah, in terms of like being public with my trading and my trading analysis, uh I wasn't really that public up until this year when I joined CoinW as a trading as a copy master trader and analyst. Before that, I was just very much very private. I wasn't really a part of. I didn't even have a Twitter. I didn't have an Instagram. I didn't have a Telegram. Really, I just did everything in private. But yeah, with this role that I currently have, it kind of requires me to be social and kind of like put myself out there and basically, you know, showcase to the world that I do have actual trading and analysis knowledge, especially when it comes to cryptocurrencies.
God bless you, dude. And this is such a wild talk about the Wild West. Like you were talking about before, there are so many assets in crypto that we thought were going to be, revolutionary. We thought that they were going to take over the world in one way or another. But so many different assets, whether that be NFTs or crypto themselves, have proven just to be Ponzi schemes. What assets are you trading when you're doing this copy master trading? Are you really focusing on the big boys like the Bitcoins, the Ethereums, or are you hopping into the Solanas, the Shibas and the
Yeah.
Inus?
Yes, I trade all the futures pairs that are available on the exchange.
Gotcha.
So yeah, I know some traders they just focus on either Bitcoin or Ethereum or some other crypto that they really have a feel for, or really know the fundamentals about. But for me, I can just look at a chart and recognize right away. So I want to be long or short this asset. So yeah, like my trading kind of evolved over the years. When I first started, I mainly just traded Bitcoin because that was the most liquid cryptocurrency back in 2020. But now, so back then there were only really futures available for just like the top cryptos like Bitcoin and Ethereum, and there weren't
Right.
really any futures trading available for altcoins. So you weren't really able to go short on let's say Solana or XRP. But now, since a lot of market makers have entered the arena, we do have actually leveraged futures trading on not just Bitcoin and Ethereum, but also Solana, like you mentioned, and Dogecoin and Shiba Inu and even Pepe and all these crazy meme coins. So
Pepe, you can get leverage on Pepe.
oh yeah, you can.
Okay.
Yeah, I think
What is?
you can go up to 50x on some exchanges, maybe even
Are you
100x.
serious?
Yeah.
Wow. Okay, so the leverage is not like Jesus Christ. Okay.
Yeah, it's pretty crazy. I mean, I don't go that high leverage, especially on
Yeah.
altcoins, because I think the volatility of Pepe and I think the newest coin that's like very popular is Rollcoin. It moves around like on average like over 10% a day. So obviously, like I don't think you don't even need leverage for an asset that moves around 10% a day. That's just crazy. But that is an option available on most on a lot of futures exchanges. So yeah, still very much like the Wild West in terms of crypto trading. I mean, you have all these exchanges offering leverage even on altcoins. So you got to be careful. Obviously, I know how to manage my risk, and I always tell people who read my analysis, like, make sure to use proper risk management, like know where your stops are. Don't go 100x leverage on Pepe or Dogecoin. Don't do it. You're probably gonna get liquidated, and I've seen it happen. So yeah,
I am so sure.
yeah.
When I hear leverage on crypto, like a shiver goes down my spine, man. I don't know if you saw the color leave my skin. That is absolutely insane. So when you're talking about risk management on a lot of these assets, like you said, you get really big swings in a day. Like obviously, trading equities, trading the normal futures contracts. I'm having a really wild day if an asset goes 2.5% either direction. 3%
Yeah.
is like unheard of. 4% happens 3-4 times a year. When you're trading assets that can move like 4% in a day on average, how has that changed how you manage risk?
Yeah, so obviously, so I use like an ATR based stop and target system. So ATR stands for average true range. So basically, I don't want to reveal exactly how I place my take profits and stop losses, but I use a ratio of the ATR basically. So maybe I'll place my stop like two times away from the average ATR for let's say Bitcoin or Ethereum, and then my take profits would be like multiples of that. So it might be 2x ATR, 3x ATR, 4x, etc. So in crypto, I think you have to kind of adjust if you're using like an ATR based approach. So maybe in equities, it's okay to use like a 1x average range or maybe slightly higher. But when it comes to crypto, especially when you're dealing with altcoins that are very volatile and could have like extreme wicks, especially nowadays when the liquidity is kind of low, I basically use basically a wider stops. So I use pretty wide stops in my risk management and low position sizing. It's like you can't use like high position sizes. Like if you have, let's say you have like $100,000 account, you're not gonna go all in with 100,000 on Pepe. You'll probably use like a very small position size relative to your capital because because of the formula with how you would calculate your stop loss and position sizing if you are using like a mathematical ATR based approach like I do.
No, that totally makes sense. I mean, there's so much in the way of volatility that could be affected, and I'm learning so much just watching your stuff and reading through some of your trades about how intensely the crypto market has been affected by things like news. With the Fed coming out this week. I mean, it's more of the same, right?
Yeah.
We hyped up this event. We're gonna say, Jerome's gonna say something that's gonna shake the world, and then
Yeah.
he comes out there and he says exactly what he's been saying for the past year. So when you're talking about ATR, you're talking about risk management. How much of a role has news played in that strategy of yours now?
Yeah. So there's been a lot of like market breaking news, especially this year in crypto. So back in June, we had the SEC come out and basically sue Binance, which is the number one cryptocurrency exchange by volume in the whole world. And then they also sued Coinbase for, I think, the whole basis of their lawsuit is that Coinbase is offering cryptocurrencies for trading that are securities. So basically all the I've got all the names that they named, but basically all the cryptos that they named in their lawsuit, like those immediately took like a 20 to 25% hit, like downwards in 1 hour when that news came out. Luckily, I was like looking at the technicals during that time, and I was mostly positioned short. So that was actually one of my better months back in June, because I really profited.
Can imagine.
Yeah, I really profited off that downwards move. And I think you were even saying in the podcast you did with Jordan that you prefer being on the short side of the market, if I'm not mistaken, just because the market just takes that elevator down approach. And it's I don't really see the elevator going up much in really any market. So I wish Bitcoin would go up 20% in 1 hour, or some other crypto, but normally it's the opposite that happens. It goes down 20%. So that's why I like to be, I guess I would consider myself more of a short biased trader, especially in crypto, and especially during this bear market that we have in the cryptocurrency market specifically.
Yeah. And I think that's a big thing that traders don't necessarily always remember. The way that assets work, everything works off of psychology, right? So people buy because they're excited, people sell because they're afraid, and being afraid is a much more powerful emotion than being excited in most cases. So talking about trading in 2020, I mean, that's the closest thing I can even imagine as a futures trader to 25% moves. But when the Nasdaq was moving 5% down, it wasn't moving 5% down because people were sitting on their hands. It was moving 5% down because everyone was pressing the sell button on any device, telephone, computer. People were faxing orders in, whatever they could do. And that's a really big opportunity for us as traders.
Yeah.
That's so wild to think that a 25% move could happen in an hour. So when you were in these trades, like what was going through your head, man? Did you hold for like a whole 20% move, like a 15% move, or?
Yeah. So since I'm more of a, well, not more of, I would consider myself a swing trader. I do like some intraday trading as well, but really the bread and butter of my strategy and where most of my profits come from are from more of the trades that I hold for the long term. So, and by long term, I mean, it's like 2 to 3 days in crypto, up to a week.
Gotcha.
Probably like a long-term trade in the equity world would be a few weeks, 2 months. But in crypto, since everything moves like very fast, my definition of long-term is literally 2 to 3 days. That's a long-term position in crypto. So yeah. But yeah, to answer your question, I was positioned. I forgot the exact setup. Obviously, it wasn't based on the news of the SEC lawsuit, but because I would, there's no idea. I mean, there was no way I would know that the SEC was going to come out with these news. So, but anyways,
that would only be a little illegal. No big deal.
Yeah. I wish I had someone inside at the SEC who could, whisper me some secrets. But anyway, I don't, unfortunately. So, but the technicals were very bearish, and they were suggesting more downside to come. I didn't think it was going to be like a 15 to 20% down move, but that's what it was. And also because I was using some leverage as well, maybe on the order of 3x to 5x leverage. Some of my position had like an 80% to 100% ROI, which is, it's not that my account grew 80% to 100%, which I think people get confused sometimes. It's based on the position sizing or the risks that I put on that particular trade. It grew by like, a pretty significant ROI.
That's crazy. That's
crazy. But I don't want to come off as I'm bragging. Like, that's very rare to get those kind of trades. Most of the time it's, you kind of like hit your first take profit target, and then trade goes back to break even. And it's kind of like more like my trades are more in the order of 10 to 15% ROI, or up to 20% with some leverage applied.
Nice. And I do think that's that's really valuable that you even mentioned that. A lot of people hear 100%, they think that your account went from 10,000 to 20,000. That's
Nah, I wish.
that's not what happened.
Yeah.
That's not how it
No.
works. You know, it's much more so like a
Yeah.
$1,000 trade turned into 2,000 on a 10,000, 25,000, $50,000 account. Um, Dude, that is so wild. So going through that experience and comparing that to now, you talk about the lack of liquidity in the crypto markets. So it just feels like everybody's lacking liquidity right now. The money
Mhm.
flows are super weird right now, but you're saying even in crypto, there's a lack of
Yeah.
liquidity.
Yeah. I don't know how it is in the equities world right now because I haven't traded it
Yeah.
in probably over a year. But especially in crypto, following the collapse of FTX, there were a couple of big market making firms. One I'm sure many people are familiar with is Jane Street, which is
Mhm.
one of the biggest market making firms in the world. They were pretty active in the crypto space, but they left, I think, a few months after the FTX collapse because of regulatory reasons. And then we also had Jump Trading leave the scene. So, and now there's actually a study done by, I forgot the name of the research firm, but they're showing like the market depth is like much worse than it used to be pre the FTX collapse. So, yeah, it's really difficult with the liquidity, especially if you're trading altcoins. Like Bitcoin and Ethereum are still pretty liquid, just because they're actually deemed commodities by, I think, the CFTC. And yeah, I'm pretty sure the SEC isn't going to name Bitcoin as a security. That would be really stupid.
Wouldn't that be
But
something? Yeah.
yeah, but I wouldn't be surprised coming from Gary Gensler. He's made a lot of wild accusations in the crypto space. But
Gary
I don't want to get too
has some
political.
problems, man.
Yeah.
Right? Hey, man, as someone that doesn't trade crypto at all,
Yeah.
I have no dog in this fight. Gary has some issues. God bless
Yeah.
that man. So for those that don't know, and I'm learning a lot here too.
Mhm.
Why would it be a bad idea for the SEC to call Bitcoin a commodity? Like what would be bad about that from your perspective? Break that down for us,
Oh,
sir.
oh, you mean calling it? I mean, I think they already deem it as a commodity, or at least not the
No,
SEC.
sorry. No, please keep going.
Oh, so the CFTC, which is the Commodity Futures Trade Commission, if I'm not
Yeah.
mistaken, what those acronyms stand for. Yeah, they say Bitcoin is a commodity because uh, Bitcoin is actually a listed instrument on the CME exchange, and that happened back in 2017. So when it
Right.
comes to the CFTC, Bitcoin is already a commodity, and I don't think the SEC is gonna like have a fight with another regulatory agency within the United States and say Bitcoin is not a commodity. Or I mean, Bitcoin. Yeah, Bitcoin is not a commodity; it's a
Right.
security. So that
Right.
that would just make both of them look really silly. So, and also a lot of
Yeah.
people don't know this, but Ethereum futures are also listed on the CME exchange. So I think
Right.
Bitcoin and Ethereum are pretty safe trading instruments uh, from a regulatory aspect in the United States because they've pretty much been approved by the CFTC to be basically commodities. So I don't
Yeah.
think I don't think people have to worry about Ethereum being deemed a security.
It's so crazy to think about, man. The CME being the Chicago Mercantile Exchange,
Yep.
in charge of all futures. I remember trading. I only traded the Bitcoin contract when it like came out, like that year. I tried trading it. It
Mhm.
was such a wild asset to trade.
Yeah.
Is it calmer now in your eyes? Is it something that's
Yes.
easier to trade or?
Yes. I don't have that much experience trading the CME contracts, but what I do know is
Mhm.
that when CME first launched their product, I think one contract equaled 5 Bitcoin. So
Mm,
you would have to have a very large account size to be able to trade that contract. So
mm,
obviously at this price point, 5 Bitcoin times 25,000, that's like a position of $125,000.
mm.
So that's a pretty incredible uh, position size, I think, for a retail trader. But recently, CME introduced micro uh,
That's right.
Bitcoin futures, which I guess is pretty similar to the micro ES or the micro NQ.
Yeah.
And I think there's micro crude oil as well now.
Yeah, there's a ton of different
Yeah,
micro
yeah. So I think
contracts.
the micro Bitcoin contract is 1/5 of a Bitcoin, which is a much more reasonable position size. So yeah, if I were trading on the CME exchange, I would definitely go with the micro futures instead of the regular futures.
It's crazy, man. And keep in mind too, the day trading margin is much less than what you need. So there's like a variety of different kinds of margin in futures. I'm sure you're familiar with it already,
Yeah,
but
yeah.
like the day trading margin on the Bitcoin contract when it came out was super low. It was like you needed $8,000 or something to trade it, even though you were commanding technically like $125,000 worth of value in terms of what you were actually purchasing for the futures contract. If you had $8,000 in your account, you couldn't exactly hold the position very long
Right.
because a couple ticks and then you've lost your account. But still, it was just talk about the Wild West, man. So now that you're trading it, when I hear you say you're trading the futures contract of these assets, I think the CME. Can you go a little bit further in what exactly you're trading? Like, how are you trading this stuff? Are you just trading it on Coinbase? Where are you getting this leverage? How does that work?
Mhm. Yeah. So right now I'm working for CoinW. I'm trading, I guess. Yeah, I'm basically funded by the firm. So
Right.
I'm not trading on any other exchanges just because that would just require so much extra time out of me.
Yeah, of course.
So yeah, I'm just trading the capital they provided with me, and basically CoinW as well as many other exchanges such as Binance and Bybit and KuCoin and many other exchanges that I think most crypto traders are familiar with. They do provide futures trading in addition to spot trading. So I like to use the futures contracts because obviously with spot trading you're not able to go short, and since we're in a bear market in crypto, like you pretty much have to go short, and the only way to do that is with futures trading instruments, which a lot of these exchanges do provide. So yeah, that's what I use for my trading. And even before CoinW, I was unfortunately on FTX, and they offered leveraged futures trading on crypto as well. But I primarily like 100% just traded the futures contracts, and yeah, the reason like I said, I chose to trade leverage futures because of the leverage they provide, and also you're able to go short, which is a tool you need as a trader. And let's see what else. What are the other reasons? So one thing that's unique to crypto is that the futures contracts are perpetual. So that basically means they
Oh,
never expire
they never
technically.
roll over, right?
Right. I mean, some other exchanges like Binance and Bybit, they now have like quarterly futures, which do expire every quarter. But most of
Hmm.
their liquidity comes from the perpetual contracts. So yeah, if you go into like your trading view and type in like BTC perp, that's usually how they're named. It's like BTC perpetual or Ethereum perpetual. So essentially, they never expire, and so I guess that's pretty awesome as a trader.
It's
So
so convenient. Yeah.
yeah, yeah. So yeah, that's a really unique thing to crypto that I like. And they also trade 24/7. So even as we're speaking right now, it's Saturday, it's almost 4 p.m. I actually do have some trades open right now. And uh
Wow.
yeah, because it's the weekend, but it's a perpetual contract and crypto trades 24/7, 365. So yeah, I guess yeah, if I were a Forex or a futures trader like yourself, I would probably have I mean, I guess theoretically you could have a futures position on the NQ right now, but you wouldn't be able to trade it, of course, until Sunday night. But right
Yeah,
now I
it would be
can,
sitting. Yeah.
yeah, after this interview, I'm probably going to jump into my account and see what's going on with my trades, and probably have to manage some positions tonight. Yeah.
That's wild, man. So Boris, you're trading. You're always having these crypto trades on. Do you take days off, or is it just like you always have those headphones on? They're attached to your body now. We're just trading.
Yeah, I'm like one of those people in the Matrix now. My brain is just attached to a tank. Yeah, I'm actually not a human being. I'm just from the future, just trading crypto for
Right,
stuff.
right.
No, no, no. I do take breaks. Obviously, you have to. So on the weekends, I don't really do any kind of like intraday trading or day trading. Since I'm a swing trader, I do keep positions. I do like hold positions overnight into the weekend. So I do kind of like have to check in once or twice a day, but it's not really, I wouldn't really consider it work that much. It's just kind of just checking in to see, have my positions hit take profit, have they hit their stop loss level. And again, with my like risk management system, I'm pretty, I'm pretty confident that even if the positions don't, even if the positions go against me, I'll be okay because I use 1 to 2% risk per trade. So at worst, in worst case scenario, I have 5 trades open. They all hit their stop loss. I'll lose 5% of my account. It's no big deal. I'll have the next day to recoup those losses. So
Right.
yeah, I'm not too concerned about having my having positions open overnight into the weekend just because I know what my risk tolerance is and I know how much of my account is currently at risk. So it's really not that difficult. I know a lot of other traders, they're actually very different from me. They're just intraday traders. So they close their positions at the end of the day. They go about their day. They go out and have go out, have a good time, do their thing, and then come back in the morning, do some more intraday trading, and then they close their positions for the weekend. But it's not really my style. I really prefer like the long term approach and really letting my trades play out and really kind of because really that's where the big profits come from is from keeping your positions open and letting trades play out and like riding the wave of a trend.
Right, right,
Yeah.
and I think that's something that's really unique, man. I mean, a part of the appeal of crypto is fast money, right?
Hmm.
So a lot of people hop into things and assume that they'll be able to hold the trade for 15 minutes, and after they hold the trade for 15 minutes, they can close down Coinbase, open up the Ferrari site, and just start building out the Ferrari that they're going to buy with the profits from that 15-minute trade. And that's obviously just not the that's
Right.
not the case, right? For 99% of traders. So let me ask you this, man. You've obviously you're very experienced in this space at holding these trades for a longer period. How what have you done to help you to hold those trades longer? That's something that so many traders struggle with, holding trades for long periods of time. How do you do it, Boris?
Yeah, it's a good question because really when I first started out, I started out trading the shorter term time frames.
Yeah.
So particularly on Bitcoin, I started out for some reason I really like the 4 hour time frame, which if you think about it in terms of equity trader, since there's like 24 hours in a day and Bitcoin trades 24/7, I guess 4 hour time frame is equivalent to a 1 hour time frame in the equity space. So in my mind, that's like, not as extreme as a 5 minute, but it's also not like just, just waiting for the daily candle to close. It's kind of like almost like a meso time frame. So I kind of like started out on, I guess, the medium to short term time frames, if you want to call it that. And then as I really, as I really started digesting more, uh, I really started to read about different trading methodologies and different approaches to the market. I came across, came across a method that really focused on the daily time frame approach and really just, I guess, yeah, just swing trading. And so I shifted away from trading any kind of lower term time frames, such as the 1 hour or 4 hour, and I just exclusively started trading the daily time frames. And I wouldn't really even look at what's happening intraday. And that was kind of strange for me because I thought, all of the money is made on the shorter term time frames. Like you have to be able to capture that big move that occurs really in any market on the shorter term time frames because things move so rapidly. But later, I kind of started to realize, oh, there is some validity to really just focusing on the daily time frame and just focusing on the trend, on the long term trend, rather than being chopped around on the shorter term time frames on whatever asset you're trading. Obviously, whether you're trading Bitcoin or the ES or the NQ or natural gas or gold, there's going to be periods of chop. Um, so I think zooming out to the daily and even weekly timeframes now, you can really see, are we in a trend or not? And if we are in a trend, we should be putting on trades and in the direction of the trend. But it's hard to explain. Like, how do I don't know how do I keep positions open like overnight or long term, or how do I swing my positions? I just do them. I just do it.
Well, I think
like Nike.
you gave a great answer
Yeah.
there,
Yeah.
Boris. I don't think you should discount it, man, because the fact of the matter is, you obviously have balls of steel, and you don't. Those aren't. People think you're born with them, but they're really made. So your
Yeah.
whole breakdown there about understanding, starting off like all of us do, thinking that I have to hold this trade for 13.4 seconds. If I hold this for 13.4 seconds, I can get $2. If I do this 10 times, I can get $20. If I do it 100 times, I'll get 200. Oftentimes we'll do like this mental gymnastics as earlier traders, but as we get more experience and build more of a track record, obviously you saw through your own experiences, hey man, I'm leaving some money on the table by not allowing myself to hold. And you don't have to deal with the chop, the chop, man. It feels like you're a chef in a kitchen sometimes. You're like cutting up vegetables or something. The chop can get so horrible in some of these markets, especially around major news events. So taking yourself away from that, making you more money, it makes so much sense to me, especially because so many of the best traders we talk to at Trade Delicious, whether that be you or whether that be someone like Don Dawson, we've spoken to a lot of traders that are very experienced, and over the period of their careers, they've gravitated more towards this swing trading approach. And it's not for everyone, but for those that it works for, it not only allows them to have like a full-time life trading, it allows them to have a full-time life trading and being able to share it, being able to have a life outside of being attached to the screens. And I love it, man. It's something that I've been working on myself. I really admire the fact that you've been able to swing like this. It's something.
Are you yourself more of a, I guess you're more of a short-term trader? I believe I think you said you only trade for 1 hour a day.
Yeah.
Is that true? Wow. That's
crazy. Yeah. So I only do it depends on the day, man. Cause I run around and I do a lot of stuff. I do a lot of work for Trade Delicious, of course. I still do some work in construction. I can't sit behind a desk all day, dude. I did try going full time a couple years back, but when I tried it, dude, I would perform incredibly well. I would make, and again, like you said, none of this is to brag. This is just what happened. I remember quitting my job, 2021, quit the job. I was in sales. I made a good amount of money, threw that money into the market. And for several weeks, I would wake up at 9, go to my computer, trade from 9:30 to about 9:45, 9:48. I would put on 1 or 2 trades, and once I hit $1,000 profit, I would shut everything down and go take my dog for a walk. And that's all I did for like 3 weeks, 4 weeks. And I got cocky, I got arrogant, I lost a lot of those profits. But the reason why I got cocky and why I got arrogant was because I was boring myself to death, man. I wasn't allowing myself to have a life outside of the trading. I got complacent in my ability to trade that particular market. Little things changed. Some news events happened. The Fed started putting some more pressure on interest rates. The market changed. And I didn't adjust with it, probably because I was taking a really granular view of the market as opposed to approaching the market like you do, taking a bird's eye view. I was stuck in the minutia, stuck in the details. I didn't zoom out to that daily, that weekly, that monthly to get a really good idea.
Yeah. You know what? The thing is, I actually want to learn how to trade like more like you do, because I'm not really, I would say I'm okay at trading the shorter term timeframes, but I'm not really as precise as I am with my swing trading. So actually that's a skill I want to develop, because I think I think they could complement each other, like both swing trading and scalping. So
They can.
if you're great at swing trading and you're great at scalping, that would be an ideal combination. Because the one drawback to swing trading is that sometimes there's just no trades to take. So
Right.
there was like one week in particular, whereas like we had this big move in crypto, and then normally after you have a big trending move, things consolidate. So during that consolidation period, I was just kind of like sitting there and like I was like so bored, and I'm like, all right, maybe I should go down to the 1 minute and start trading.
Right.
But I don't really have a strategy for the 1 minute, so it's probably not the best thing to do. And then yes, I really want to kind of learn to trade like the lower term timeframes, like the 5 minute to 15-minute timeframes, and be able to not only profit from longer term swings, but just I guess intraday movements as well.
We'll work on it together, man.
Yeah,
You can
for
teach me a
sure.
little bit about swinging. I can teach you a
Of
little bit
course.
about scalping. I think the core of it is, like you were saying, you did a lot of books and a lot of courses. Once you have a good foundation in the basics of how charts work, all charts work the same, guys. You got green bars going up, you got red bars going down. There's some issue of volume and there's some issue of, price action. All of these things are true for whatever market that you're trading. You're just kind of changing the packaging and you're changing some slight details about the asset that you're trading. But at the end of the day, the most important thing is you have a good head on your shoulders in terms of risk management. If you listen to this whole thing, you'll hear Boris talk about risk management time and time again. He's not risking 10% of his account on a daily basis. He's not risking 20% on a trade. You're risking 1% to hopefully get 2. On a good day, you'll get 3 or 4. But when you have that foundation, the world's your oyster. Boris, I know, I realize that you still have to take a look at your trades and everything, so I don't want to take up too much more
I don't know.
of your time.
I have plenty of time, but
Oh, beautiful, beautiful.
yeah, no, it's all good.
In that case, I really wanted to ask you a little bit more about your thoughts on where crypto is now and where you think things are going. You talk a little bit about this bear market. What's your experience like with it, and how long do you think it's going to last for? I know it's a super hard question, but
Yeah, so no, it's a really good question. And yeah, I guess I can answer it in 2 parts in terms of like where I see it going and how long the bear market is going to last. So first of all, where is it going? A lot of it will have to do with all the regulatory uncertainty we have, not
so
just
much
in the
regulatory
not just in the United States with the SEC, but also
yeah,
worldwide. Like I think Bitcoin trading is still banned in China.
yeah.
Then other countries are banning it, or some countries are actually promoting it or embracing it. Like El Salvador, I think they made it the national currency back, was it like 1 or 2 years ago.
Yeah, it's a couple
So
years back. It's crazy.
yeah, and I know a lot of other countries, especially like more like second to, I guess even third world countries, are really adopting it. So actually, I was actually reading a study from a crypto research firm just today, and they were showing what are like the top countries by, I guess, by crypto adoption right now. And like number one is, I forgot what number one is, but the United States is actually only number 4 or number 5, and I believe number 2 is actually
Wow.
Nigeria. Oh, I remember now. Number 1 is India. Number 2 is Nigeria. Number 3, I'm not sure, but yeah, United States is only number 4, and then yeah, you have some
What?
other like African countries and Middle Eastern
Mhm.
countries that are really adopting it. So I
Yeah.
think the United States and other, I guess, developed nations are really falling behind. And so a lot of firms or a lot of crypto, not only crypto exchanges, but a lot of Web3 companies, they're actually moving to Dubai, where CoinW is actually headquartered. But not only CoinW, a lot of crypto companies have offices there right now. So I think even Coinbase, which is the biggest exchange in the United States, they were considering moving to Dubai, just because the SEC has that lawsuit against them. So Brian Armstrong, who is the CEO of
Wow.
Coinbase, I think he even said, "Yeah, we're going to Dubai." And then we have Gemini, which might be like number 2 or number 3 exchange in the United States. So Gemini was founded by the Winklevoss twins, if I'm pronouncing it correctly.
Yeah, the
Uh,
Winklevoss twins, the Facebook guys.
yeah, the Facebook guys. So
Yeah.
they're making a big push to moving to Dubai and moving away from the U.S., which I think is really really bad for the industry as a whole. Uh, and yeah, it's just kind of unfortunate to see that the United States isn't really embracing this technology. So to answer your question, I guess a lot of it will depend on how the regulatory environment unfolds. I'm obviously not an expert on that. I'm not a legal expert. I'm not a regulation guy.
Brother,
I'm just
no one is an expert on
yeah.
market direction. I can promise you that much.
Yeah, and in terms of how long the bear market is going to last, so I actually wrote about this maybe a month ago, and I made an analogy back to the previous bear market that we had in Bitcoin back in 2017 when I first started trading Bitcoin. Basically, my conclusion was that basically the bear market back then lasted from 2017, and I would consider like the bull market, I guess the most recent bull market that we had, it started in 2020, in late 2020, when Bitcoin was able to take out its 2017 high. So in totality, that took about 3 years to basically take out the previous cycle's high.
Yeah.
And now I'm thinking, if you're using like the same kind of analysis technique, we had the FTX collapse last year in November, and a few months before that, Bitcoin was trading at its all-time highs in the upper 60,000s. So then I would say it's going to be a minimum of 3 years from that point. So it's going to be at least another, I'd say it's going to be more than a year of bear market, because back then the liquidity was much less in terms of, well, not even liquidity, just the market cap of Bitcoin. It was 3,000 during the bear market. And now it's, I believe, at the time that we're speaking about this, Bitcoin is trading at around 26,500. So it's about, if I do the math, that's like what, 6 times as more than it was back then. So given that it's a much more mature market, I think it might be even as long as even 5 years. So then if we take the approach that the bear market started in 2021, then I would say the earliest the bull market could start is 2024. So maybe in a year from now. But really, I think since the market is more mature now, and it takes a lot more money to move an asset like Bitcoin around, I think we really might not see a bull market until maybe even 2025 or 2026. And a lot of it will have to do with, especially like more like macroeconomic factors, such as what's happening with the Federal Reserve and interest rates, and like the war in Ukraine. Is it gonna get worse? Are we going to World War III?
Yeah.
Because really, when Bitcoin went from, well, basically from its inception up to its high during the last decade, we were like in a really great, I guess, fiscal environment for equities,
Right.
like the S&P 500 and the Nasdaq. They were pretty much in a bull market throughout
Yeah.
that entire year. So, I mean, throughout that entire decade. So if now we have all the negativity that's coming with crypto, such as regulation and all the other stuff, and if we couple that with the potential that we might actually see a bear market in the equity markets, then who knows? Maybe there will never be another bull market. Maybe this is it. I don't know. But no, I think Bitcoin will reach higher numbers in the future. But for now, I think we'll have to keep our expectations in check.
Like, amen, Boris. That was an aggressive statement, big dog. You said maybe we're never going back, man. Maybe we'll never see 60K
Yeah.
again.
Yeah.
So I really love your skepticism, man. One thing that I feel like I really struggled with when I start off with, and something I still struggle with, is the idea that like we need to keep really weak opinions. Like, I love futures markets. I really think that they're really amazing. They're dying, liquidity in futures markets is really falling off of a cliff. In 10 years from now, the futures market may not nearly be as large as it is now.
Mm-hmm.
So to think that you're comfortable enough with your asset to say, hey man, this may not work out long term. That's amazing. So obviously you have some faith in crypto. You've been invested in it, you've traded it. Do you think that it's here to stay in its current form? Do you think it'll evolve to something different? Like what do you think as a whole about the crypto market?
Yeah, I mean, it's definitely we're definitely getting a lot more adoption, such
Right.
as with I guess the NFT craze that we had, uh,
Yeah.
I guess a couple of years back. Obviously, the NFT market has gone down considerably since then, but obviously
What
there's a lot
NFC
of
market? Yeah.
yeah, obviously there's a lot of use case for crypto aside from a means of exchange or a store of value. You can use it, uh, use it as a use it for non-fungible tokens. You can use it for smart contracts, and there's obviously a lot of development being done along those fronts. So both on the creative side and on the, I guess, more monetary side for using it as an actual means of transmitting money. And recently, earlier this year, I was at the Consensus conference in Austin, Texas. And basically, Consensus is one of the biggest crypto conferences in the world. And what I was amazed to see was that despite Bitcoin being in a bear market right now, and as well as pretty much every other crypto asset, there was so much, like so many different companies at the conference, especially companies in the traditional finance space, such as Fidelity Investments and CME were there, and many other like traditional finance institutions. They were there. There were so many people. There were so many events happening. There were so many great speakers, and that kind of made me feel that there's a lot of development being done uh, during the bear market. So the space is still still very much alive. It's very much thriving. Maybe not on the not maybe not when you look up, your favorite crypto ticker on TradingView. Maybe the price is down 20% over the past month. But like I know if you actually go on different community forums and go out to different networking events and go to different conferences, you'll see there's a lot of activity. A lot of people are getting involved. Um, like I know a lot of like software developers are jumping from whatever software engineering job they have over to code for a Web3 company or produce some do work for a Web3 company and do some coding for their projects that different Web3 companies are currently working on.
That's so killer, man. The idea that crypto growth isn't just connected to fiscal value. I think that's one of the most exciting things about the space because when I think about, obviously as an equities trader, when I'm looking at a ticker, I'm thinking about that ticker only in terms of the numbers, the figures, the
Mhm.
cash, the dollars. We don't talk about Nvidia just because they're making just a couple bucks on these chips that they're making
Mhm.
that support Chat GPT. We talk about them because
Yeah.
they're making billions upon billions. And it's really cool to think that there's another
Mhm.
space like crypto where there isn't just a fiscal value. This thing is growing in ways that we haven't seen before. That is so cool to me,
Yeah.
man.
And also NVIDIA is all you can say it's kind of connected to crypto because a lot
100%.
of mining companies are using not just NVIDIA, but NVIDIA and AMD graphics cards for their mining because it
Exactly.
requires so much computing power. So it's all interconnected. Like everything is so connected in this industry, which is
It
why
really is.
yeah, I look at the equities markets as well and the forex markets because everything is connected in this space. So you really have to take a look at every market to see what the interplay is between not just crypto and equities, but also crypto and the US dollar index and crypto and gold or even crypto and I don't know if there's a correlation between crypto and crude oil, but maybe that's something I'll have to take a look at.
Maybe, man. I haven't been able to find any correlation for crude oil in a while these past few
Uh-huh.
weeks. As I'm sure you know, I trade crude oil quite often, and
Mhm.
it's been a cruel mistress. But but Boris, man, I have to ask. We've talked about things on such a big eagle view level, like the macroeconomics. But as a successful crypto trader, I would be remiss if I didn't ask you. Just basic advice, what would you have told yourself starting off as a crypto trader? What advice would you have given yourself to find success earlier in your career? You obviously have so much knowledge around the whole thing, but when it comes to actually making dollars and cents, what would you say to a younger Boris?
Yeah, I would say, well, first of all, before you consider leaving your full-time job, consider really building up your account size, because the account size that I thought was sufficient enough to start trading full-time, I later started to realize this is not enough. This is not enough. I think you really need to have, you really first need to have a lot of savings in your bank account. Uh, and when I say savings, I don't mean for a month or two. I mean have money saved up for a year of living expenses. So that includes your rent, that includes food, maybe that includes other activities like even going on vacation. So whatever, I don't know where in particular a listener of this podcast is tuning in from, but whatever the cost of living is where you are, make sure you save up enough money to survive a year of things not going your way. Maybe you'll make a bad trade, or maybe uh, a leading cryptocurrency exchange like FTX collapses and you lose your account, which is unfortunately what I had to experience. So I guess I would say, yeah, number one, like really make sure this is something you want to pursue full time. Make like whatever you think the account size you need for trading full time, I would say double it or triple it. That's actually the real account size you need. And then as far as the like emergency fund that you need a like 5x or 10x that, because like things like losses will happen even if you have like the strictest risk management. There's gonna be things that happen that they just won't expect. So I've been trading the space for over 3.5 years, and I've had my share of really bad losses. So yeah, I would say, yeah, just make sure you have a excess reserve of cash available, because I don't know, maybe newer traders will never experience any losses and everything will be great. They'll just make money and it'll be a dream. They'll be living like Leo and Wolf of Wall Street and everything will be great. I don't know.
Right.
But I think not just me, but a lot of other trader stories that I've listened to, they've experienced losses. So I would say number one, yeah, make sure you have a lot more savings than you intend on having. And then number two, at the same time, I'm kind of like saying, be very like risk averse, but also don't be afraid to take risks. Because, for example, when the whole NFT craze and the whole DeFi craze started happening in crypto, I didn't really jump on it. I just stuck to just trading Bitcoin and Ethereum that I knew and I was comfortable trading, names that I was very well aware of, like their price levels and their movements. And I never really got caught up in the NFT hype or the DeFi hype, which may have been a good thing in retrospect, but maybe not, because I know a lot of people made a lot of money from NFTs and from different DeFi projects. So yeah, that's kind of like a long-winded answer, but that's probably what my two biggest tips would be.
Thank you, brother. And it wasn't long-winded at all, man. It was a perfect length. I think a lot of traders get caught up in the dream, like you and I did. We get caught up in the dream. We get over leveraged, and then we lose a boatload of money and have to go back to the drawing board. And
Yeah.
so I think that wisdom is so important and pertinent. We're coming up on an hour long here, brother. So I think that's a really great place to end things. Boris, thank you so much for coming on and sharing your story, brother. You're an inspiration.
Of course. Thank you for the opportunity. It's been a pleasure speaking with you.
Yeah, thank you. Traders, thank you guys so much again for joining us here. Great conversation with Boris. Obviously, we're super excited to have him on a variety of different talks moving forward. He's in New York. I'm in DC. I'm definitely going to drive up there at some point and bother him. So you'll see some in-person content from us soon. But if you guys like what you saw, please like, share, and subscribe. It really helps us out with the algorithm. And as always, please trade well and trade delicious. We'll see you.
See you guys.
Hey guys, Jordan here. Just wanted to send you a personal little thank you for sticking around and watching us here at Trade Delicious. If you did enjoy the content, consider subscribing. Everything we do here is completely free. And of course, we have some other video suggestions here which you might love. We will see you in the next video.